Hi all, welcome to the Mind School. Today we will discuss about how a group of four drinking buddies from graduate school saved Brazilian economy from collapse. In 1950s, Brazil's government planned to build a new capital, Brasilia. But problem was that government didn't have enough money. So they started printing money to fund the projects. In 1960s, capital was created, but what followed was rapid inflation in economy. For the next 5 decades, inflation was the main problem in Brazil. In 1980s, inflation was so severe that a 3 Cruzeiro coffee would cost 33 Cruzeiro at the end of the year. Shopkeepers increased the prices every day. People rush to buy goods before prices are increased. This led to further increase in prices. The inflation rate was 80% a month. Many leaders tried different ways to bring inflation down. One president thought solution to inflation was simple. Businesses are raising prices, make that illegal. There was a price freeze. But what happened was people hid the merchandise. And you could not buy anything because they wanted the prices to grow up because the situation was a fantasy. The main problem with this plan, of course, is you can't just freeze prices and not deal with the underlying problem. The fact that the government is still creating money, which causes inflation. Next president tried to address this problem. He froze all bank accounts. 80% of private assets, that is 80% of the money you have in your bank account, you can take out. Economy went down a cliff. Many committed suicide and the president was finally impeached and ousted. There seemed to be no solution for the problem until a group of 4 economists who were drinking buddies in graduate school were called to solve it by then finance minister. Their approach was more psychological than economical. They suggested that people's confidence in currency need to be regained. They suggested the creation of a virtual currency called URV, that is unit of real value. URV was pegged against Cruzeiro. Prices of goods in Cruzeiro kept on increasing, but price in terms of URV was kept constant. For example, if 1 URV is equal to 7 Cruzeiro and price of milk increased from 7 Cruzeiro to 10 Cruzeiro, URV will then be equivalent to 10 Cruzeiro. Price of milk will still be equal to 1 URV. Prices of goods in terms of Cruzeiro remained unchanged. And the idea was people start thinking in the fake currency, in URVs. Because just last week you got paid 1000 URVs, milk cost 1 URV, next month you get 1000 URVs again, and milk would still be 1 URV. This continued for several months, and slowly people started believing in new currency. Finally, old currency Cruzeiro was taken back and new currency Real was introduced, which is equal to 1 URV and also equal to $1. And then one day, July 1, 1994, the central bank deployed truckloads of new cash in this new currency, the Real, to banks in the cities and provinces. Soon after that, inflation was brought under control. Brazil was finally able to grow in the way it always should have been all along. And the finance minister, who admittedly knew nothing about finance, became president twice.